and welcome to the channel. Hope you're having a fantastic day. Today we're talking about a stock that actually is down 5% on a day, and we're going to find out what's going on with the stock. The stock actually has been declining lately. However, that does not justify the stock, okay, because the stock balance sheet, cash flow, which I'm going to go over everything and tell you, I can guarantee you the stock itself right now, to me, it's an opportunity for anybody. And I'm going to talk about the why I think that, right? This is not going to be a financial advice. I'm going to give you all the facts and you could be your own judge and understand where you stand here, right? Because at the end of the day, I've seen a lot of folks say buy low, sell high. But essentially, people jump on a wagon where the stock is already going, bananas, right? So I think the objective should be that find information that you can early on and see where the stock sits. And if you understand the stock is undervalued, then it's a point you got to get into that position, right? So let's talk about that. I'm going to talk about the price, where it is right now, what could be a potential entry point, like where could it go from there, where could it fall, if it falls, where it's going to go, like all the support and resistance, what the exponential moving average is saying, what the market is saying, like is it buying, people are buying this, people are selling this, all that good stuff. The company we're talking about, Alibaba, it's a wholesale company and they sell product online, and you can actually be in any country, go to Alibaba.com and they'll ship it to you. Of course, they're more oriented for businesses, and there are a lot of vendors from China. And the fact of the matter is, this is a huge company. Before I get into all that information, right, if you're new to the channel, please do subscribe to the channel. I release video every day. And the objective here is simple, right? We're going to find good stocks, find if there's a stock undervalued, and, potentially make money on it. Now, it doesn't have to be a expensive stock. It could be a cheap stock, but a good stock. If there's a good stock that is going for cheaper, then I don't mind talking about that, right? So let's talk about the company's market cap. It's $303 billion company, large company. Their PE ratio is 29.57, which is great, not that high. Their EPS is 3.75, which is earnings per share, which means they are profitable. They are profitable at this point. And the volume that are traded today is 25 million. On an average, they share about 33 million. Now you see a 25 million. That generally is the case because is not bullish right now. A lot of people selling it. That's why it's a lower number, but they're still 10 million lower than their general whatever they have. So this is the balance sheet. I got it from Yahoo, right? Yahoo usually keep the 10Ks in there. So now any number that you see here we gotta time it with 1,000, okay? So on March 31st, 2021, when they released their earnings, they actually it's $1.6 trillion. So you got to take this number times it with 1,000. It looks like a billion, but it's actually a trillion, okay? You got to times it with 1,000. Their net liability, the liabilities, because this is a balance sheet, it's asset minus liability, owner's total equity. So liability, they have about 615 billion. If you minus that, you're still left with $1 trillion right there, okay? So that's their balance sheet for last year. Great number. As far as the operating cash flow is concerned, they are profitable, 231 billion, because you got to times it with 1,000. They're invested 244 billion. Now, this is right here. This is what it caused the investor to sell out most of their shares during that time, and that's what started the decline for the stock. Is this number right here, 244. If you see here, 2020, they only invested their expenses were only 108. These are investing cash flow is the expenses, right? So they only had 108 in 2020, but in 2021 it was negative 244 billion. So they did raise money by the stocks and all that. So that was about 30 billion. And they started off their position from last year, and then the cash flow move over to the next year, and then the end position was $356 billion, right? So they still have free cash flow in their possession, which is the cash flow which is not used for any of the expenses. 188 billion. A very good financial sheet, very good cash flow, strong company. Like, company's not going anywhere anytime soon, right? So institutional banks now own about 17.45%. Now here's something that you got to notice, right? You see there's a lot more selling happened than they bought, okay? Now, there are two factors that factored in on this, right? Because, as you guys know, Chinese were not helping, like they were not condemning Russia and Ukraine in the last 2-3 months. a lot of institutional banks don't take chances, right? Way U.S. sanctions, Russia, the next one would have been China. All right, so a lot of institutional banks, sold out of their positions because it's a Chinese stock. They didn't want to run into an issue where government sanctions their securities and you end up losing money. So they got rid of the stock, and that's the major cause for that whole stock to go down tremendously. So the analysts from these 13 big companies are saying this is a strong buy. Again, none of this, and the big companies are big companies, right? Like JP Morgan Chase, Morgan Stanley, Citigroup, Mizuho Securities. Again, this is not a financial advice. This is just all the facts. You can make your own position, own judgment. Now, as far as the short interest is concerned, they have literally 1.68%, which means the stock, nobody's betting against the stock. Nobody wants the stock to go. So let's look at the chart, right? So we already know the stock is falling, right? Right now, the stock is residing around $111. Now, I do have a Fibonacci retracement, and on Fibonacci, it sits around, like, it's coming to the 38 point. Let me just get rid of some of the, let me talk about this Fibonacci first. Let me remove the EMA for a minute. So right now it's residing around, it's about to hit 38.2%. There are three different levels. That is 61.8%, 38.2%, and 23.6%. I remove everything else. Now, from the Fibonacci retracement I did from March 15th, because I'm on a 4-hour chart, I'm not on a 30-minute or 1-minute chart. I'm on a long-term position chart here because I feel this is more of a portfolio stock. Of course, you could play it as a swing trade as well, make money and rinse and repeat. So the stock went up, and now it's consolidating between that 23 and 38.2. So if the stock happens to cross that level 120, let's say if it crosses this 100 and there's a resistance right here 122, the next stop the stock is going to have is $139, and if it crosses that, it's going to go to $179. Okay, and if it drops, for example, let's say if it started dropping 111, it goes to 105. The next stop is going to be 92. 86 is one of the stops that stock was at around in 2017. The stock fell $86. That's 2017. That's like 5 years ago. Stock was at that level. So the stock it went even lower than that on March 15th. Okay, let's talk about the EMA, right? Moving average. I'm not using a simple moving average. I'm using exponential moving average. The difference between the simple is just takes the different periods and divide it by the number of candles, but EMA takes the most current candles heavily, and then whatever happened in the past, it doesn't consider that much. It doesn't put a lot of emphasis on that. So I like to use EMA, which has helped me at least make a better decision. So EMA is saying that the stock is slightly above the 48 period, which means the stock is still somewhat in a up, not an upward, like a consolidated mode. RSI is 50, so anything above 70 means the stock is overbought. Anything below 30, it means the stock is oversold. So this is sitting around 50 means like this stock is more like consolidating, like it's going to go into the same level for a while. And the MACD is slightly bending down a little bit. MACD is a moving average conversion diversion. If you see the MACD line, which in my case is a brown line, if it started going down, which means the stock is still going to go down, as we discussed, right? If it goes down, the next stop is going to be 105 or so. If it drops from 105, it's going to be 93. If it drops 93, then you're looking at least 85 or a 74. But if it goes up from here, for example, the next stop is going to be around 123 or so, and then it's going to go to 139, and then you could see a potentially 179 or so. Now, as we talked about, the majority of the stock is actually down is because of the fact that uncertainty that was there because of the Ukraine situation, and there was a fear that Chinese stocks will get sanctioned because of their not condemning Russia the way they're supposed to. So there's still a lot of fear on that, and a lot of people are not investing in Chinese tech, which is rightly so. But at the end of the day, they cleared their position. They're not with Russia on this, and they didn't look. At the end of the day, it's all politics, right? They want to come out in a way that they can be able to have business with both countries. China is like in the middle of everything, right? Chinese products have been distributed around the world, and they want to be friends with everybody. So the way they clear their position is very awkward. They'll never come out and say yes or no to a thing. It will always be a sort of a long answer to everything. So, but again, look, whatever's going on with the world is unfortunate. But at the end of the day, everybody's trying to live and make money and be able to feed their family. So I would say, look at this stock, add it to your watch list. Again, I don't think this time is going to come again where the stock is going to be very lower like this. It could potentially go even further down, but because the fact that the company is a $1 trillion company, the balance sheet is over $1 trillion assets, their market cap is over 300 billion. So and these are the factors that you got to look into, right? At the end of the day, that's what tells you whether the stock is undervalued, overvalued. So to me, this stock is majorly undervalued. I think the stock does worth more than $111. That's why those analysts are thinking is a strong buy, because things don't add up. You have a good financial, you have profitable operating expense. This is money on the table that people living out there just because of the fear that it will get sanctioned. Again, the fear is real, right? Like, everybody don't want to lose their money, but I don't think America will be sanctioning Chinese anytime soon. I think that's something I'm very certain of, because it's just rough. China is a main exporter to a lot of countries, including U.S. So sanctioning China will be a hot mess for everybody, right? So, I think this is my quick video. Just definitely keep this stock in your watch list. None of this was a financial advice. Everything, I hate people thinking that, this is my advice to you to get into this position. I just gave you all the facts. I'm telling you what I'm going to do. To me, this is definitely something, it's a long-term buy. Like, I've purchased a few PayPal stocks as well that I made a video about. Those are also, I think, it's a long-term stock. But again, I hope you like this video. If you're new to the channel, please do subscribe to the channel. Helps me a lot, keeps me motivated. Generally, I make videos on penny stocks just to cover everything that we can and make money as we can, right? So thank you for watching. Talk to you guys in the next video.